Stock forms part of the operating cycle of business and corresponds to a use of sources of finance. This is, of course, the reason why they are found on the assets side of the balance sheet in current assets. Because of this, stock has an impact on the business's balance sheet. Furthermore, since stocks form a direct part of the business's operating cycle as consumption, as you would expect, they have an influence on the income statement. If you want to understand the impact stock has on a business's financial statements, you have to bear the following in mind.
The balance sheet is a snapshot at a given date of the business's sources and uses of finance. The impact of stock on the balance sheet is therefore visible at the end of each accounting period on calculation of the new total for stock holdings at the end of the accounting period. The new stock total, called closing stock, is substituted for the previous stock total from the beginning of the accounting period, called opening stock. The income statement, however, is a movie showing all the transactions recorded in it over a given period. The analysis of stock, therefore, has to be broken down into two phases. Firstly, during the accounting period, then at the end of the accounting period.
Let's start with the stocks of goods for resale held by a trading business. The business records sale of goods for resale as income in its income statement. This income must be able to be matched to the expenses. The expenses must therefore not relate to anything other than the purchases that have actually been consumed, that's to say sold, during the accounting period. Throughout the accounting period, the accounting staff record purchases of goods for resale at the right time and for the right amount in the income statement, independently of sales. So, the expenses are treated as being consumed immediately. At the end of the accounting period, we move from fiction to reality.
So throughout the year, the accountant treats all purchases as having been consumed. However, this is not what happens in real life. The only goods that have been consumed are those that have been sold, which does not necessarily include all the goods that have been bought during the accounting period. The aim is therefore to move from purchases to consumption, or in other words, from what has been bought to what has been consumed.
Put the words in the right order to put together two correct sentences.
Well done, you got the right answer.
A business trading in fashion wear has an opening stock of 120 garments, purchases 230 more, and has a closing stock at the end of the period of 150. Fill in the following headings of its income statement for the accounting period concerned.
During the accounting period, the business records purchases of goods for resale of 230. The business's stock has increased by 30. These goods have been bought but not yet sold, consumed. They are therefore recorded as a change in stock levels, reducing purchases of goods for resale in the business's expenses, which therefore comes to 230 less 30, making 200.